Procter Gamble out with first quarter 2021 results just a few minutes ago, beating on the both the top and the bottom line. And we always talk about this, sales forecasts, core sales. Joining us now, John Mueller, Vice Chairman, Chief Financial Officer, and Chief Operating Officer of Procter Gamble. He's also a member of the CNBC Global CFO Council. And John, you have been, it's episodic, that's what we like to say. We talk to you a lot, and many of the times we're talking about the sales guidance for a company the size of Procter & Gamble that sells all over the planet. So you're raising guidance. Could you go over that? Tell us what the previous guidance was, where you are now, and why you're able to do that in this environment.
Our business really has strong momentum. We were growing our top line about 6% pre-COVID. We managed to maintain that through the first 6 months of the calendar year, despite significant challenges. And now the quarter that we just completed, 9% organic sales growth. And I'll get to guidance in just a second, but that 9% organic sales growth translated to 19% core earnings per share growth, 22% on a constant currency basis, 95% free cash flow productivity, all in one of the most dynamic and challenging environments we've seen in a long time. That performance, though, gives us confidence to raise our guidance after the first quarter of our fiscal year. We're raising sales guidance from a range of 2 to 4 to a range of 4 to 5. We're increasing earnings per share guidance. We're increasing our free cash flow productivity guidance, and we're increasing our commitment for cash return to shareholders. So good all the way around.
The environment that we're operating in, and it's been very sort of interesting to watch and very clear who the winners and losers are in the new environment that we find ourselves. What do you attribute the better sales to at Procter & Gamble, John? And geographically, what do you attribute it to? And how does it make sense during the pandemic?
There's clearly a heightened consumer need for health, hygiene, and a clean home, which our portfolio fits right into. There's also a flight to brands that I know and trust that are going to do the job for me and my family. And so that's yielding share gains on a global basis. We grew in every region, both top and bottom line. We grew in every segment, both top and line. So the strength is broad-based, and it's driven by some of those things I just mentioned.
I'm not actually being a smart ass. I don't know if I'm allowed to say that, but I just did. But okay, I can see why your house needs to be clean. But for example, Gillette. A lot of people, I can't imagine that you're selling as much shaving stuff, deodorant, soap. I mean, people are at home. They're just with themselves. Are all of those products showing the same type of sales gains? It seems like they would. I would even think shampoo, that people that are maybe at home and working at home aren't quite as clean as they were before. Is that wrong?
Our grooming business grew 6% in the quarter. Our shampoo business grew 8% in the quarter.
All right, never mind.
And that's not only due to externalities. That's due to a very strong portfolio of brands and an integrated set of strategies in categories that are daily use, where performance drives brand choice, and we've been investing in that performance to build a superior consumer experience, and that's generally been positive across the portfolio, both geographically and by category.
So you have been, you're always, and whenever you're on, you're talking about ways that you're trying to be more efficient with suppliers and distributors and shelf space and all the things that you, new products and innovation and getting rid of some products that aren't perhaps growing the way you'd like. So all those initiatives have been ongoing as well. And I guess you'd say that those are bearing fruit as well.
Yeah, I mean, you mentioned both innovation and productivity, which generally together are margin accretive. We saw that in the quarter. Gross margin up 140 basis points, operating margin up 300 basis points. These are not standalone strategies. This is a highly integrated set of strategies that together produce the kind of results that we're seeing. They were doing it in a year ago. They've done it through the calendar year this year, and again, this quarter is a good good proof point, which again gives us confidence to increase our guidance.
Given the varying responses to the pandemic around the world, geographically, do you see any differences there between regions in terms of your results?
Yes. Yeah. Our two biggest markets are the U.S. and China. The U.S., we grew 16%. China, we grew 12%. We're seeing some more challenge in Southeast Asia, the Middle East, and Africa. That's probably our most challenging market right now. Latin America grew very nicely. Europe grew very nicely.
Shepard Smith here. Thanks for watching CNBC on YouTube.